You're such an asshole.
Okay, lieutenants and economists, the old captain here. I got all my shit in my truck because I'm moving around. That's the drawbacks of being... Are there any drawbacks? Yeah, living in a truck. Get a van. Hey asshole, this is a video request. I'm a 37-year-old black man with a degree in finance that doesn't want to have kids or get married. I'm currently a W-2 employee that makes 6 figures. I'm going to kind of anonymize him because he's such a unique individual. You guys are like, oh, I know that dude. So I do want to keep his anonymity. A year as a, he manages a strip club in a large town. Unfortunately, my job does not offer a 401k, so I currently use an IRA to save for retirement. Last year, I unhappily paid approximately $27,000 to the government for Social Security, Medicare, Fed taxes, state tax, and all of the world's parasites thank you for it. Recently, I bumped into a friend that works for a firm called Blah and told him about my $27,000 problem. He said I could avoid paying some of my federal and state taxes if I start a whole life insurance policy with his company, and they call some of the money a donation. And my hair already went up on the back of my neck. I've studied Dave Ramsey for years and currently have $400,000 in my bank account, mostly due to his teachings. Dave has always preached against the whole life policies, but I've never heard him mention about people using it as a tax shelter. There's a reason why. This year, from now on, I plan on dollar cost averaging $500 a month in a mutual fund to get that $400,000 out of my bank account. Should I also experiment with the whole life policy to try and keep some of the money I have to always pay in federal and state taxes? Okay, so I looked into this. I even consulted the great Chad Elkins. He's like, well, I'm Chad Elkins. I'm so fucking busy and important. It's tax season. I don't have time to eat, man. He didn't say that. That was just me impersonating him. So let me go to my notes. And I'm going to say no. You don't want to do this. And the reasons are many, and it depends. If you had kids or beneficiaries, maybe. And even then, this is the wrong tool, I would say, to lower your taxes. Unfortunately, what my conclusion is, you're just going to have to pay your fucking taxes. And that's all right, dude. If you follow Dave Ramsey, you got $400,000 in the bank. You have almost fuck you money. And a philosophy I'm taking is like, look, you're not going to be able to convince 75% of the women and 35% of the men not to vote for your money. You're just not going to be able to convince them to do that. So if you can make more money, live frugally, then you could afford pretty much whatever you want. So yeah, it sucks that when you include federal sales, property, all this other shit, they take more like 40% of your money. But at the same time, as long as you don't fuck up, and it doesn't sound like you're fucking up, you're still going to live a better life than most people who make $100,000 or more, because they spend $120,000 or more. So just accept the fact you're going to have to pay your taxes. All right? Now, I'm going to get into some other things down the road, but as it stands right now, the number one reason I would not bother with this is you don't have any beneficiaries. I was like, oh, I need life insurance. I'm like, you're a bachelor. You don't have kids. The rest of your family's dead. What are you going to do, leave the money to the dog? So the whole idea of life insurance is you die, your kids are taken care of, but you ain't got no kids, so there's no real reason to get that. Now, then there's the cash value of life insurance, which what they do is they take your money, and some goes actually earmarked into funds that would go to pay out in the case of your untimely demise. But then to make it attractive, they say, well, there's this cash value or cash surrender value of the life insurance that you could borrow against or withdraw from down the road. And that's the investment portion of it. That's fine. There's nothing wrong with that. The problem I have with that is you don't need the insurance. So depending on how much money they earmark for the life insurance, which you don't need, versus how much they're going to earmark for your investment aspect of this life insurance policy, that money that went into the life insurance is wasted. So it's like, I contributed $5,000 to my IRA, but $2,500 of it I'll never see in my life again. So even though, yeah, there's this investment component to whole life insurance, mathematically speaking, if you just throw that money into the index fund or whatever, statistically speaking, you're very likely to beat out any rate of return you're going to get on whole life insurance. And so I know this has nothing to do with tax deduction. I'm just saying nominal money, like at the end, how much you have at the end of it, just, man, pay your taxes, pay your capital gains taxes, and invest it in a mutual fund or something like that. So that's another thing that I don't like about the whole life insurance. Secondly, okay, way too complex. Let me read through it here. I operate by a P-51 Mustang principle, if you know what P-51 is. P-51 is the pinnacle fighter plane of World War II, at least on the Allied side. The Germans had some pretty cool shit. But the P-51 was brilliant because it was easy to produce, it was easy to repair, it was easy to replace, it was streamlined, it was simple. Contrast that to a German Tiger tank. That's great. That's a superior tank over there. If it's fucking running, if the gas system doesn't leak, if it was so over-engineered, it was like any other German machinery coming out of Germany, BMW, Mercedes. One thing goes wrong, your blinker goes off, you gotta re-overhaul the engine because the Germans are fucked with their engineering. I like things that are simple. And the reason why is I can understand them. And usually 9 times out of 10, especially when it comes to finance, if it makes it complicated, like, remember .com? I don't know if you're old enough to remember the .com days. These guys are coming in with their sales pitch. Whoa, we do the RAM, and then we do the gigabytes, and then we RAM it, and then we have teraflops. And I understand if you understand this because you're a fucking idiot, MBA from Goldman Sachs. But we're just asking for $2 billion, and they couldn't throw the money at these people fast enough. It's the same problem here. Is like the finance industry is notorious for making overly complex financial products. You get lost in the jargon, and then you don't even know what you're investing in anymore. And then they sell you shit that you don't need. So here's, where is it? And I'm really abbreviating it. You are free to access your money and invest as opportunities arise. Dividends will continue to be paid. You will purchase additional paid-up insurance, and those will also pay dividends. The contract values and dividends will grow whether you have borrowed money or not. You then have the right to liquidate outside investments or have a place to deposit inheritances to refill the contract. That already sounds complicated enough. Now, here's what really got me. When you retire, you can simply instruct the company to send you a check each month for the form of a non-taxable loan. Now, there was a guy who was a corporate executive who he was paid very little in salary, but the company would lend him money and he just wouldn't pay it back. And since loans are not considered income, that's how wink, wink, nudge, nudge, just don't pay us back that loan, we'll forgive it. He didn't have to pay income tax on it. He got busted for that. This is the same thing. It was like, hey, you just borrow money and that's not considered income. And hey, now they say, when you retire, you can simply instruct the company to send you a check each month in the form of a non-taxable loan. The Department of Labor has ruled that this cash flow is not income. It is not subject to all the forms of taxations enumerated for qualified income. It is subject to no reporting and no tax. Each dollar is worth many times the value of each dollar. Okay, no. That is that slimy ass shit. I know it says that there. But all of a sudden the IRS comes down and says, yeah, that's too fucking bad. Give us our money. I don't care what the department... This shit is what scares me about it. And now you're thinking jail time. Now, it's very unlikely you go to jail and say, well, I didn't understand this financial product. The IRS agents look at we don't understand it either, but after 5 hours of studying today, okay, here's what it is, and here's why you got to give us our money back. And if you don't, we're going to send you to jail. I don't... It's overly complicated, and when I hear say, well, we'll lend you the money... But it won't be taxed. See, it's a little, no, absolutely not. And then the final thing that made the hair on my back of my neck go up on top of the hair on my neck that was already up is when I said, well, we'll just call it a donation. No. I know you hate paying taxes. I know I hate paying taxes. There's only one thing I hate more than paying taxes, and that's going to prison. All right? Never been there, don't want to be. Maybe I like prison. I'm just going to assume I don't like that more than paying taxes. This stinks to high hell. All right? It already doesn't serve you or your non-existent family, because you ain't got no kids, in terms of rates of return and the practical use of this. And And depending on how much goes into life insurance and how much goes into the investment component of your whole life insurance, again, pay your taxes, invest in some kind of stock or bond or whatever. Chances are, even if you have to pay taxes on it, you're going to come out further ahead, because I'm going to assume half your money goes to insurance that you ain't going to use. So not only is this product not for you, this snidely whiplash, we're going to go offshore and you're going to get an LLC and then you're going to do this and we'll call it a donation, but we'll lend it back to you, but through the LLC and the C Corp through Hong Kong, but a Singapore subsidiary. Fuck no, dude. Fuck no. If you don't understand it, don't invest in it. That is basically what I'm saying here. So, here's the old Captain solution. One, you're just going to have to pay your taxes. All right? I know it sucks. It sucks. You're doing your IRA. Unfortunately, you're starting to bump up into that limit where you got income limitations and you can't even deduct your IRA contribution. But what you may want to look into is setting up some kind of business. That's why I asked if you could set up yourself as a contractor. You could go as an LLC. And when you have an LLC, a whole bunch of other tax deductions come into play, legal, that you wouldn't normally have as a W-2 employee. You can write off your mileage, you can write off your suits, you can write off your gym membership because you got to stay in shape, you can write off a whole other group of things that you couldn't normally write off as a regular employee. That's if you could convince your employer to do that. The other thing is maybe you could get your employer to pay for things like insurance that aren't taxable. Like, hey, you pay for my insurance. You ask them, go up and say, look, can you set up a 401k plan? You know, maybe they just haven't thought about it. Maybe, and it's, you know, not that hard. There's plenty of brokerages more than willing to come in and offer your company a 401k plan. But for you individually, if there's a way you could buy a duplex rental property, set up a company that happens to be a hobby or of an interest of yours that you like to pursue, but you can make a good financial go of it. Once you open up a company, a lot of deductions that aren't normally available to other people come up on the radar. Another thing you may want to look into is a solo 401k, but again, you need to have an LLC or an S Corp. That may be beyond the purview of this video, because it's dependent upon each individual situation. But once you have an LLC or an S Corp or something like that, you could set up essentially your own 401k plan, a solo 401k. And not only are your stocks and bonds and things tax deductible, but through other ways that aren't as complicated as this fucking bullshit. You can even, like your investments in Bitcoin, it opens up, like when you get an IRA, it's like, okay, Fidelity says you can invest in these funds, and surprise, surprise, they're only Fidelity's funds. If you're lucky, you get a self-managed account, SMA, and a broker say, yeah, you can invest in whatever you want, but it's usually then you got to go through a brokerage. It's publicly traded securities, stocks, bonds, mutual funds. But if you get one of these solo 401ks, private investments into LLCs, lending money to other people, peer-to-peer lending, those become tax-deductible investments. But again, that may be a little bit down the road. And shoot, you're probably busy. There's nothing wrong with taking home 60 grand a year, especially if you're, and you seem to be the saving type with all that money. So those are really the only other options I got for you. I wish I said, oh yeah, here's this clear, obvious thing that you can do, and it's just not the case. Not unless you become a company of some kind. Do other, essentially what they are is like Kog plans, solo 401ks, simple IRA, stuff like that, which are created for sole proprietors to have their own 401k. And then you can get some significant tax deductions in those, but it's not until you got an LLC. So, anyway, hope that helped out. Terribly sorry about you having to pay all those taxes, but again, it's better than jail. We'll see you guys later. Toodles.